Hey, this is Allan Ostler, and welcome to the January monthly market report. For the next 20 minutes or so, we're going to talk about the most important things happening in real estate right now. And, as we start the new year. So I'm going to sort of define reality as we kick things off here in just a minute, but I just kind of want to give you a little bit of a template on what to expect in the coming market. So I think the best advisors in today's markets are the ones that are creating certainty for their clients. And the only way that I can help create certainty, is if I kind of share what's happening and some of the reasons behind it. All right, so my goal here is over the next 20 minutes or so to kind of express the different things in the real estate market and kind of show you what might be the reality moving forward here. So Bill McBride from Calculated Risk, his quote said, "It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale." And that's probably the most true statement there. There's so much speculation in the market right now, and what's going to happen with mortgage rates, speculating on what's going to happen with the Fed, what's inflation doing, what's going to happen with the coronavirus, the Omicron stuff that's going around, and so much more out there. And people are kind of speculating on what kind of impact it's going to have on the real estate business. But moving forward, there's one thing you can count on, and that's I can guarantee that the inventory is going to remain low, and that it will be the market indicator for this year. And I guess that's kind of where we want to begin. This is just kind of saying that every year in real estate, we kind of want to see where we're at and kind of figure out where we might be headed. All right, as we define the reality here of the market, again, the bad news is listings are at record lows, and over the last couple of years, they just keep getting lower and lower as people's desire to own a home is increasing, and their demand has depleted our housing supply all across the country. And there's a number of different reasons for that. Reasons why the listings are at record low. Because if we look at this graphic here in this national graphic, you'll see that the inventory, if we look at housing inventory year over year, depending on what state you're in, is going to have a vastly different change. So here in Florida, you can see that we're down at around negative 45% of what we've been year over year. And then up in Idaho, you can see inventory is starting to increase at a more rapid rate. So this has come from realtor.com, and what they kind of do is they gauge the market information back from 2020 all the way to 2021 and see where we're at now. So, but if you go back here on this realtor chart, just 1 month, you can see the most recent data. The national average you see is kind of there in the middle, the bottom of this slide, and it's almost 27% down year over year. And you can look across the country, like we were talking about, and Idaho is kind of leading the way, so to speak, at 55% down there. But most of the country is in the lighter brown color, somewhere between the 15 and 30% down on inventory. But no doubt a significant lack of inventory all across the country here. All right. So now the truth is, right here, right now in real estate, will we not be able to, if we're not able to reach our market potential because of low inventory, what's going to happen? And so the thing is, if we had plenty of inventory, you'd probably see more homes sold in this country than ever before because there's that much demand for it by a lot. But when we don't have the homes to sell, the transactions just kind of plateau at a lower level. So if you're working or talking with somebody and you're discussing the frustrations in the marketplace, you can look all across the country and pin it down to the point that we're in this low inventory environment. All right, so like I said before, there is a strong demand. And if we see kind of what's happening here with buyer activity, you'll see that showings are very strong for the amount of property that is available in the marketplace. So the buyers are out there in full effect. And I am expecting that to increase as time continues. As you can see in this chart here, we're crushing the numbers even before the pandemic hit and the amount of properties compared to listings that we're showing. So the buyers are out there looking at everything and making offers sometimes before the sign is even posted in the yard. In fact, last week I was making a call for a client on a property, and as soon as they had contacted the realtor to discuss the property and its features, he cut me off and he said straight away, "Hey, don't bother. Today, as I was putting out the sign in the yard, a guy came up and offered me all cash, and I've now taken it off the market." So the property was listed hours and then it was taken off the market cash. So the buyers out there are kind of being relentless. And you can see that with this quote here from the leader of the Showing Time app for realtors. He says, "Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred. It speaks to their desire to keep searching for their next home." Yeah, there's no doubt buyers are out there in full force. Many of them are motivated by a number of different things right now. It could be the impetus of rising rates or saying that we want to do something before they rise, or it could be a different scenario where they're saying something that has changed in their life or work, or something that has caused their needs to drastically be altered. They're out there and they're wanting to do something in full force to get things underway and get things purchased. So and ultimately, as we discussed in that previous slide, the leading indicator for the market is showings. And in these amount of showings that are taking place, we can see that we're at a high here for demand. And as that demand turns into contracts, we'll probably even see lower inventory as we move forward here. So, but maybe you're thinking you already knew that, it's nothing new. I know this inventory low is not new, but it does need to be emphasized that there are plenty of buyers I know that are out there. And as soon as the inventory increases, it gets snatched up and is turning into a buyer's opportunity. So there's a lot of experts out there. They're talking about this right now. And I think that there are a number of opportunities, big opportunities right now to kind of capitalize on what's out there and what's happening. And so if I can recommend anything, and that's going out there and finding off-market properties. That's what I'm willing to go out there and do, is find these off-market properties that aren't in the current active inventory list, so that I can get my buyers into properties that are not having bidding wars on them. So I think that's the opportunity here as a real estate professional, is to be looking at ways that I can help my clients get an advantage, get an edge. And that for me is finding properties that are considered pocket listings, or listings that are not currently in the public domain. All right, maybe you're one of these people out there that wants to do something because you have different reasons. Maybe you want to just move up into something bigger, or maybe you're wanting to downsize. One thing that will be a major factor for your decision is the amount of home equity that you have. Right now, let's see here. Yeah, so right now, CoreLogic's third quarter home equity report showed that the average homeowner with a mortgage gained $57,000 in equity. You know, that's a lot. I could end the equity piece just on that right alone. So the 57,000 as of the third quarter was the largest number, I believe, of all time equity growth in a home. Now, you know, people are feeling a little bit wealthy now because they have that around the country, and they're wanting to go out and roll that forward. And a lot of people out there are wanting to use that equity to buy maybe even a second home or an investment property, which also continues to decrease the amount of inventory that's on the marketplace because of people's demand on wanting to get properties, not only for investment, but for other reasons like Airbnb and Verbo or short-term rental kind of deals. So when there's a huge spike in equity, it kind of alters the way that people consume and go about their daily lives. So, all right. The lack of insight around home equity presents an opportunity for real estate professionals who are always looking for touch points with past clients. So what I'm wanting to do is reach out to you and see if there's any way that I can help you, help find any off-market properties for you. If you have something that you want me to look for in a specific neighborhood, please let me know as soon as you can, and I will get on that, and I'll find you something that is not listed on the market before you're well, I guess I'll find you something before somebody else finds it, so that we can work on the deal exclusively and not have to worry about all these other investors bidding up the property prices. All right, here's kind of a chart of home equity growth and showing that it's still surging. But again, this is Q3 data that goes back a little ways. Not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid a distressed sale, but they've also enabled many to continue to build their wealth. All right, so moving forward, I'm thinking that this is going to be a major factor in what households do. U.S. households own 36.8 trillion in owner-occupied real estate. That's 11.5 trillion in debt, and the remaining 25 trillion is equity. In inflated adjusted terms, homeowners had an average of $294,000 in equity in Q3 2021, which was a historic high. All right, so what to expect moving forward in the 2022 housing market? All right, first of all, what to expect on mortgage rate projections? You can see here from Fannie, Freddie, NAR, NBA, what they're saying is about in 2022, well, what they're saying is they'll break it down here by quarter, kind of what to expect for interest rates. Q1, 2, 3, 4, the average there of the rates is 3.3%, 3.345, 3.55, 3.70. And I believe that's a kind of a fool's game, though, really, to kind of project where the interest rates are going to head. Kind of what I do is I'm always looking at a way where I can follow what the experts are saying and then kind of make my own decision based off of those stats and the information that they provide me. So I'm going to give you my opinion on kind of what I think is going to happen, but again, it's just my opinion. But I think it's going to be somewhere between 3.5% and 4% rate hike on the interest rates, an interest rate hike during the second half of the year. And you can kind of already see that because we're seeing volatility even this week. I see the rates that are jumping up, and like for example, I just saw the average 30-year fixed rate loan jump to 3.2%, and that's going to go up and down and up and down. Just depends on daily noise and kind of what's happening out there in the market. But I do believe we're in an upward trend on mortgage rates. I did talk about this several times a few weeks back, a month ago, and I think that going back to where we were over the last 10 years, we've been between about 3 and 5% on average with a 30-year fixed mortgage interest rate. So it's still great financing, great financing for a home. But that's kind of what you can expect. That's how we can kind of create certainty in our minds, is knowing that the interest rates are still low and that it's still a great opportunity to take advantage of those in the process of purchasing a home. Now, I know there's been a lot of people out there that have been discussing forbearances and how that may affect the inventory level in the marketplace. But as you see in this graph, forbearances have finally fallen below 1 million. And this going into this year, I believe, is going to be a non-issue, a non-message. I don't think you're going to hear much about it, but I want to educate you on it. So just under 1 million, about 890,000 mortgages are actively in forbearance. That represents about 1.6% of active mortgages. You know, we've covered this before on what's happening. So those people that are coming out of forbearance, if you remember the circle graph that we've used many times, like I can tell you those numbers are still within the parameters of what's expected. So I didn't bring those charts or that information today, but I've showed it kind of before in some of the other stuff I've done. There are still people that need to do something with their forbearance, but it is a very small fraction. And oh yeah, by the way, we just talked about it. Their homes have appreciated on average of $57,000 in the last year. So they still have opportunities besides foreclosure. And I think we need to emphasize that. And I think we need to be available, myself as a real estate agent, to help people who are struggling with being behind on their mortgages. And I can show them some of the reasons why it should be a non-issue and help them move on with their lives. But I believe that something I believe that the forbearances are something that we're going to hear less of as we move forward. All right. Here's another quote by CoreLogic. We may see a little bit of an uptick in foreclosure rates in 2022, but just an uptick though from an extraordinarily low level. We're not expecting to see a big increase at all. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. So that's what CoreLogic said. So yeah, as we kind of continue to move forward, the foreclosure thing will be more of a non-issue. You know, because I don't really see banks being in a position or posturing a way to try to foreclose on these people when they've got that kind of equity in their homes. I think the banks are trying to work whatever they can out with the homeowners. And the numbers just aren't there, like the last housing crisis. You know, that's largely due to the hard work of every one of you on this Facebook group and in my group. It's because a lot of the realtors out there are helping and getting the information out there to these homeowners and showing them that there's alternatives to foreclosure. And if you know anybody that's in that process, let me know. It's something that I'm very good at helping with, and I can definitely help anyone you know that's struggling with their mortgage payments or anything like that. So Moving forward though, here is a graph of home price and how it's accelerated. As you can see, over the last year, we went from 10% home price acceleration up to the 18% level. And then we just kind of plateaued since June, July, August, September, just kind of going sideways. So I think in 2022, as the inventory kind of starts to pick up, we're going to see a not a decline in prices, but a less accelerated incline in the prices. So instead of going from 10 to 18% appreciation, we should go back down to somewhere where it's more of a normal rate of growth, maybe in the 5 to 10% range. So here's the home price forecast for 2022 across the country. All these different groups have given their input on it. But if you take the different groups and what they think their forecasted price appreciation is for the year and average them out, it's at 5.2%. So overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think that home sales will continue to rise and actually reach a 16-year high in 2022. All right, so here's some of the resources that I pulled from this information. If you want to go back through and check it out, there it is. I'll also leave some more market-specific information into the links below and give you some resources here on different markets around the country and how they're performing. Well, I don't know about around the country, but different markets, local markets, and how they're performing. If you have any questions, let me know. If there's anything I can do for you, any way I can help you, please don't hesitate to reach out to me. I'm here to help you find your great investment. If it's not an investment you're looking for, I'm here to help you find the house of your dreams and do it in a way that you can feel great about it moving forward. I'm not here just trying to be high pressure and sell you something you don't want. It's not what this is about. I just want to see you guys be successful and move forward with 2022's goals and have a wonderful first quarter of the year to kick it all off. So, hey, my name is Allan Ostler with Ask Realty Pro. Signing off. Thanks.